get to the content. But if you're watching live, let me know who you are and where you're from so I can shout you out and say hello. And let me also make sure your stuff is working. All right, let's see. Let me share this out in a couple of places. And then we're gonna get going. Okay, it doesn't look like, okay, there it is. First thing I saw was this big red screen. Almost, had a mini heart, just a little heart attack. All right, let me share this out. And then we're gonna get going. Oops, nope, that's not it. I'm having just a little brain cramp this morning, but I'm almost there. There we go. All right, cool. Okay. So let's get started. So like I said, when you pop on, let me know who you are and where you're from so I can shout you out and say hello. And if you have any questions as well, if you have any home business owner friends that could benefit from this information, make sure you share it out. So first, a couple announcements. Starting June 5th, I will be broadcasting live from my fan page. And so I want to invite you to like my fan page. There's going to be lots of good stuff going on over there. All right, so there's my fan page. Okay, so let's get on with today's content. So for today, I wanted to share 5 audit triggers for home business owners for the IRS because there is a concern that home business owners get audited more than other people. And so I want to actually share, some information about that so that we can go forward with the correct information. Okay, so first of all, the information that I share with you here is for presentation purposes only. Make sure that you consult with your tax professional regarding your tax situation, as everybody's tax situation is different. All right, now, so let's talk about the odds of getting audited. So if let's say the normal population, out of the normal population, you have about a 1% chance of getting audited, okay? And if you run a small business, that percentage can rise to 2.5%. Now, if you run a small business that generates $1 million or more, then that the odds of getting audited rise to about 10.9, let's call it 11%. So it really just depends on where you are in your business, and there's a whole bunch of other stuff. Okay, so while I'm going to share with you 5 of the 5 audit triggers, there's no one thing that's going to happen to make the IRS say, right? That's going to trigger an audit for you. But there is, it's a big picture kind of thing, just an overall picture that will, give the IRS pause. Okay. So one of the first ones that I see most often is omitting 1099 income. So we're gonna put that on the screen, okay? We'll call it trigger 1, omitting 1099 income. Okay, so for your 1099s, if you earn $600 or more, you should be receiving a 1099 from wherever you got that from, okay? Now, just because you don't get a 1099, it doesn't mean that you don't report the income, okay? So, but what happens is that you know what, sometimes really people just forget. It's really not even necessarily intentional. It's just that they go and file their taxes and whoops, we got this 1099 and then don't do anything about it. But what happens with that 1099, just like you get the 1099, so does the IRS. So the income is reported to the IRS, and if they don't have anything to match it up with, then they're going to send you a letter back and saying, hey, you did not report this income, therefore we have adjusted your return and you may have to give some money back. Okay. So that is audit trigger number one. Hi, Cortinas. Hey, listen, I put the, yes, how can I follow you on Facebook? I put the link to my fan page. That is where I'm going to be broadcasting starting June 5th. And you can also follow me here. So I hope that answers the question. Okay, so let's go with trigger two. Round numbers. Okay. So with round numbers, now there are some industries that really do just have round numbers. You know, when I go to get my hair done at the salon, they do not tell me my hair is $84.99. It's $85, okay? But if your income is in round numbers as well as your expenses are in round numbers, that signals that you're essentially estimating your income and expenses, and that's going to give some pause. So for instance, with your expenses, your your water bill is going to be $56.69 is not going to be some round number, even though, when you file your taxes, they round the numbers up. They round the numbers up or down. But if in your documentation, all you have is round numbers, that is going to signal that your numbers are not actually true. So you want to make sure that you document actual numbers, and with the technology we have now, if there is something that you're missing, you can go back to the source and, get a copy of receipts or bills or anything like that. But just overall round numbers throughout, that is going to give the IRS pause. Okay. Now, trigger number 3, which might freak some people out, but just hear me out. Having a home business. Okay, so actually trigger 3 and 4 kind of go together. So having a home business, like I told you, if where the normal population gets, 1% gets audited, if you have a small business, which is home business owners, and I want to say up to 500 employees and I want to say $7 million, you're considered a small business, okay? But that is network marketers, direct sales, independent contractors, it can be salon owners, barbershop owners, laundromats. Okay. So, but even still, having a home business, the reason that, that increases is because there are so many instances of fraud. Okay, there's high instances of fraud, and when people decide to cheat, they understate the income, like the underreporting, and they overstate and inflate their expenses in order to reduce their tax liability. Okay, so the IRS has an industry-wide type of database where they'll go and look and say, okay, compared to the rest of the industry, this looks off. Okay. And so that causes, to raise an eyebrow. So because there are so many instances of fraud in the home business arena, and I'm going to share a couple of stories with you, okay, so that you really get this. But because there's so many instances of fraud, this is where I read this book from a former IRS agent, said, this is where, IRS agents cut their teeth on learning to audit is on home business owners, because there are so many instances of fraud. Okay. But if you're on the up and up and you do the things that you're supposed to, if in the event that you do get audited, then you don't have to worry about that. Okay. Now, number 4. Okay, there we go. I need to put that up there. All right, trigger 4. is shady tax preparers. And you might wonder, why am I putting shady tax preparers in the home business arena? Okay, so like I said, with the Schedule C, the home business owner, whether you are, like I said, a network marketer, direct sales, you can, even if you are a single member LLC, you're still going to file a Schedule C, okay, with your tax return for your business income. Now, if you run into a shady preparer, this just makes it just worse. Okay. I almost can't even complete a sentence. Okay. So what happens? They overstate expenses in order to get a huge refund or reduce a tax liability. And a sign that you might have a shady tax preparer is if their fee is a percentage based on the refund that you get. So I tell anybody, if you're dealing with a tax preparer who says, hey, I can get you a refund, and they haven't even looked at your documentation, you need to run in the other direction. So let me explain to you what's happening. So just this year, within the last couple of months, there is a tax preparer in Charlotte, North Carolina that was sentenced to 7 years in prison in order to pay back $22,000 in restitution. Why? For filing fraudulent returns. He was overstating expenses, understating income, and inflating numbers in order to get higher refunds for his clients. Then there was another one that went to jail, I want to say for 10 years, but don't quote me. But he's got to pay back over $10 million to the IRS because of this same stuff. And I want to say it was 2015 or 2016. There was a couple in Texas that went to jail for 15 years for filing fraudulent Schedule C returns. So what does that mean for you? As a home business owner, you cannot go to sleep at the wheel when your tax preparer is doing your taxes. You need to understand every number that is on your taxes and make sure it makes sense based on the documentation that you provided. Because what happens is, we tend to, to blindly trust the person that's doing our taxes. And you really should be able to do that. But because you really don't know if someone is being unscrupulous, especially if you don't have a relationship with them, then you need to check it out. And I don't care how long they've been doing your taxes. They should be willing to sit down with you and explain everything on your tax return to where you understand and that it makes sense to you, and be able to match up the numbers to say, okay, this one goes here, this one goes here. But a lot of times that doesn't happen because, especially if it's tax season, it's here. We want to hurry up and get the taxes done and just boom, just be done, but not really reviewing the numbers to see what's there. You have to be more responsible and more aware of what's going on with your taxes. And if you think something is questionable, have someone else review your return, with the documentation, have the return that was filed, take it to someone else and let them review it. You really just never know until you get, maybe a second set of eyes. Okay. So shady tax preparers really make it more difficult for honest home business owners because they're committing these fraudulent things, and, you don't know about it until somebody goes to jail. Okay. And we don't want that in our lives. All right. Okay. So trigger number 4. Trigger number 5. We're on number 5. I can't type. Trigger 5. Consistent business losses. Okay. Always get a lot of flack and a lot of pushback when I share this. Okay. For the IRS, for you to be considered a business, you must be in profit 3 out of 5 years, which means that you can get take 2 years of losses. When you're starting in business, the IRS expects you to operate at a loss because you've got startup costs. You're just getting in business and you haven't exactly had a chance to make money yet. So the IRS expects there to be some losses. But if you go into, year 3 and you haven't made any money and you're still operating at a loss, then that is going to give pause, because the IRS is simply asking, if you're losing all this money, how and why are you still in business? So that, so that's one of the things that will also cause some problems, because what happens is, in the way that the Schedule C affects your overall personal return. So let's say you've got one person that's running a business and you've got the other spouse that's working. Okay. If that business loss, it reduces your taxable income. By reducing your taxable income, you're either going to reduce a tax liability or you're going to increase a refund. Either way, it's going to affect that number. If you're consistently operating at a loss and it's consistently reducing liability or increasing a refund, then the IRS is going to pause, because they want to know, how is it that you're still operating this business and you're operating at a loss? So you have no money. So how are you still operating? And why are you still operating? So that's why you have to be aware of that. And if the IRS determines, okay, listen, no, this is not a business, this is a hobby. So then you can only take expenses up to the income that you generate. So you can't show a loss if the IRS deems that you are a hobby. Now, you can file a form 5213, I do believe is the number, don't quote me on that, but I think that's what it is, to extend the time where the IRS reviews your, makes that determination about your business, and it just depends on what it is. But you've also got to be able to substantiate that you are actually working your business. You've got stuff in your calendar, you're holding appointments, you are, giving out samples, just all of these things to substantiate that you are actually in business with the IRS, for them to say, okay, yeah, you are in business, you're still losing money. And, then they can extend that time with the form 5213. So, there are tons of things that can happen that could, to trigger an audit. But again, it's not just one thing. It's an overall picture that that something just doesn't look right that will cause the IRS to audit you. Okay, nuts and bolts. Because when it boils down to is this, and I want to share this with you. As business owners, we pay taxes. Okay, business owners do not get refunds unless you're operating at a loss. But if you're continually operating at a loss, then the IRS says, no, you are not in business. Okay. So, I get all the time where you have business owners saying, well, I don't want to pay taxes. Oh, okay. You can't have your cake and eat it too. If you earn income, you're in business to make profit. If you're not making a profit, then how are you in business? Okay. So I really hope this helps you out. You can share this with somebody if you think you think they'll get some value out of this. Let me check in some other places to see if I have. All right. So Deborah says, great tips. Thank you very much. I appreciate it. And I think that's it. Okay, so listen, like I said, starting June 5th, I'm going to be broadcasting live from my fan page. So if you haven't liked my fan page, find me at Home Biz Tax Lady on Facebook and follow me over there. And if you're watching this on YouTube, thank you so much. Make sure you subscribe so you don't miss anything. And that's it for me. I will see y'all tomorrow. Bye.